Hi guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host Hamza Chowdhury, and welcome to our Sunday night stock update. Today is January 31st, 2021, the last day of the first month of the year. What ended up being one of my sort of record-breaking months I've ever had in my trading career. It was just a super solid January, a lot of momentum plays, a lot of crazy plays out there that we've talked about on this channel. Gamestop, AMC, and I've talked about my sort of plays, and I hope that you guys have been killing it, and if not, it's definitely a good time to reflect and reset coming into the next month and sort of being able to just go on to the next trade. Like we talked about on our Friday recap, that part of trading and being successful at trading is understanding that we all make mistakes and we all maybe don't identify a good risk management plan when we get into a trade and we sort of pay for it. And ultimately what we want to do is review, reflect, and be able to sort of adjust and make any adjustments. If a lot of times if you're uncomfortable on a trade, most likely it has to do with the size that you're taking. And a lot of times most traders will recommend taking no more than 2 to 5% risk when you're investing in any stock and having a diversification. And coming into today on Sunday when the futures opened, I have the chart open here on the 15-minute chart. You can see we actually gapped down, and so a lot of the stocks were tanking, and now we've done sort of a gap fill as the day has sort of progressed. And so it'll be really interesting to see what the markets are doing. You know, COVID's still playing a big role on what we're seeing is in the markets. We obviously have a $1.9 trillion package, which when that gets passed, if it does get passed, will obviously have a tremendous effect on the market and a positive effect, obviously, when we're adding cash flow and money into people's pockets. And so I expect to see that sort of as a catalyst for us moving into February and seeing where we go with that. But really, you know, the variant and just the effectiveness and, of course, the death toll is really tremendous. I've had some personal friends lose their family members to COVID, and it's been rough for many people out there. And so what I talked about on Friday was, you know, a lot of you guys who might be trading right now, whether you're doing this as a side hustle, as a career, maybe this is something that you need because, you know, you don't maybe have a job, you know, don't forget to pay yourself. And that's my biggest sort of advice going into this week and sort of February is just don't forget to pay yourself. A lot of these companies are trading at all-time highs. We have a lot of momentum that coming into this year. And now that what we're looking for is sort of a pullback in the market to sort of retrace and get sort of a next leg up, you know, don't forget to pay yourself. And what I call dip buy, which is when we look at a 15-20% reduction opportunity like we're seeing in Apple and Tesla. And so the stocks today that we'll go over is Apple, Tesla, Palantir. We'll go over GameStop and AMC. And, you know, those 5 stocks we'll cover throughout the week and just talk about trades that I'm taking. And I'll go through the video and just talk about, you know, certain levels that I'm looking for price action. And of course, I trade a ton of other tickers during the week. And I'll mention those during the week as I take them. So first things first is our friend Apple reported earnings this past week, and we talked about the triple top that it made over here at the 145, and now we're starting to see the profit taking and the pullback. And you know, Apple just completely killed it. It had over $100 billion quarter, and so as always, it's just a safe company. And what we talked about last week is some levels that we identified for sort of dip buying. And dip buying, you know, what I refer to in my, if you're new to this video and this new channel, is that any line that I draw in as a horizontal line as a light green, sort of a thin green line, is what I call a dab or a dip buy. So it's not a full-size position. The full-size positions for me are more in the thicker green lines. They just represent more support. For example, for Apple, this 127.50, you can see these several candles where we had a lot of dip buy, and there's also more validation because of where the 50 is trading. And so what we saw was an all-time high, and now we're seeing similar to what we saw back here, sort of a 15 to 20% pullback. And so a dip buy on Friday at 130, which was perfect. We did a bunch of calls out of the money, and we sell them on pushes. And that's what we talked about on our Friday recap, right? Is we're selling calls, or buying calls, excuse me, on the flushes and selling them back on the retracement. And so again, my full size that I would personally trade on Apple is the 127.50, risking down to about 125. So I'd have about a $2 risk ratio. And of course, you know, what I expect is as we sort of come down and start trading in a channel with this Bollinger Band between this upper band and this lower band, I expect that we should sort of see a bounce off the 50-day average this week. So I see some continued downside to Apple. We'll validate the 130. Again, if we break it, because we did get really close to it on Friday, I can see 127.50 being the ultimate buy zone. And again, if you're long Apple, I mean, these are opportunities to buy. But I mentioned that, don't just hold full size into earnings. You can always sell a portion of your portfolio there. And then you can obviously come back when you see the 15-20% retracement down here and essentially, buy back when you get a discount of at least 10% at 126 from 145. You're getting almost a 15% reduction there. So that's the key levels that I'm looking for this week. Moving on to Tesla, same thing. As I mentioned on Friday, that I was just sitting on my hands waiting for this massive flush. As the volume picked up, I was just waiting for the 795 area, and I mentioned too, going to earnings, that I saw this thing coming back into the 700s. And so my ultimate buy for Tesla is going to be in this level here. It's going to be the the dip buy at 775, which we got on Friday, close to 780. And so we were about $5 off. So I'm not a full size position. It's not something I would hold and feel comfortable being heavy at Tesla at 780 for a long-term position. Again, this is all day trading. We're buying and selling throughout the day. For a long position, what I'm looking for again is the key levels of, okay, 775, we got the strong rejection, and you can see the massive green candle that we had. And of course we held that level, and we sort of retested it down here about an hour later, and we held pretty strong. Okay, so 775 is definitely a position where, let's say you are interested in buying 100 shares of Tesla, 775 is where I would be buying around like 30 shares. Okay, but if we get to a more sort of a level that I'm more interested in, which is sort of the 695 level, the 700 level, that's where I go in full size, and I don't mind if I have to bag hold. We see that the 50-day average is moving up. We can see that we have some negative momentum, which is why I see continued downside for Tesla. The 50 days here, it intersects perfectly, but do I see an $80 day of Tesla going down 80 bucks? Not like we did on Friday. So I do see that we'll start forming this channel, and the 50-day will move up, and we might be able to get to 700 this week potentially, but I don't think it's going to happen in one day. So again, we're looking for a flush of get some more sellers out, cash those profits, and then hopefully we'll get some new buyers. I just mentioned on Friday, I wasn't a buyer at Tesla at $900. I wasn't a buyer even at $850, right? But I'm a strong buyer at $695. I'm a strong buyer at $700. And so we're looking for those people to come in and for the volume to pick up, because it died down a lot. And you can see, like I said, as this momentum sort of continues and this RSI comes down, and we're getting closer and closer to 40, which indicates that it's becoming oversold. Now we can definitely, start getting in. And again, if we bag hold 5, 10, 15 points, not a big deal, because we got essentially 300 points, or excuse me, 200 points off at the top, right? So at 700, you're 200 points from the top, but buying at 900 and, holding on, I mean, obviously you're down 15%. So same song and dance that we talked about is you want to sell going into earnings. You want to cash your profit. If you sell just a portion of your portfolio, again, guys, don't forget to pay yourself. You can always buy back down here when we know that these flushes are going to happen. And again, when the profit takers are essentially out and flushed out. So again, my heavy position will be 695 to 700 for Tesla, and we'll follow that during the week. And again, the Bollinger Band will probably come closer, and we'll start forming a channel, kind of what I expected back here between 6 to 700. I'm now expecting between 7 and 800. Okay, so we'll see what that does for us tomorrow. Palantir, part of the stocks that we're seeing the squeeze with, that we mentioned on Friday, that on Wednesday we saw a $45 squeeze, and you can see that these longer wicks are showing you some type of rejection of those prices. And now that the 50 days really kind of moved up, this was the level, the heavier level that I'd love to dip by is the 2750. And you can see that with this intersection, this would be my ultimate heavy buy zone for Palantir. And then we identified some other key levels during the week. So the first one we identified was when we had the flash crash on Monday, was the 2950, and it bounced perfectly off that level, which was great. But there was actually another level that it held really well, which was this 32 level. And you can see during the week we had quite a number of bounces. So this to me is, yes, it's a light green line, it's a thin green line. So I do dip buy, I do buy, but I don't go full position. So for example, if I want to buy 1,000 shares at Palantir, that's where I might buy maybe 200 shares. Okay, and the reason why that is, and I'm really speaking again to long-term traders, is because that level is something that we just created last week and it's been validated. But if we continue to see market weakness and we continue to see profit takers and potentially rotation to other stocks that are heavily shorted, we could see people dumping the stock back into the 20s, which again is the ultimate buy zone. But the two things we're risking, like we mentioned again last week, was the earnings are going to come out. And again, what I expect to see is a ramp up back into the 40s and potentially 50. And then what I expect to see is that the stock will essentially sell off, similar to Apple, similar to Tesla, because the earnings have already been factored in. And potentially you have that lockout period, which we said that a lot of shares, people who were initially invested in the stock pre-IPO, can essentially release their shares to the market. And that's going to cause, like it has several other stocks like Snow, to tank. So I expect that we can see a run to $50 in the next couple of weeks, but coming up to February 11th, which again is only going to be really 10 days, is, I can see this thing selling off. So any dip buy in the low 30s, high 20s is going to be a good deal. You can take the run up all the way up to $45, $50, wherever we end up pre-earnings. And then, like I said, just be cautious and manage your risk, manage your size. Again, anyone who bought in the 20s, you had more than a 10-point gain in a week. So you've been doing really well. Palantir has probably been my best play for sure the last couple of months. So, definitely excited about this stock. So again, the dab play would be at 32, and then the going heavy, and even at 29 you can add, but the heavy play for me would be 27.50 for a long term. If it comes, great. So we'll look forward to that. The next play will be Gamestop, probably the most exciting stock out of all the stocks that we talk about. The one that has been, on the news pretty much worldwide now. Everybody's talking about it. I mentioned again on Friday, to me, it is a gamble play. Just illustrating this on the 15-minute chart on Thursday, you can see, we hit a top resistance of 500. So that's the key level for a breakout trader if you're a breakout trader. But you can see the reason why I call it a gamble play is, right, imagine the people buying, let's just say, 450, 500. And now you're going from 480 all the way down to 115, guys. And this is in a matter of literally like an hour and 15 minutes. You've lost 90% of your, or 75% of your gain. And so I'm just not a fan of the stock and these massive moves. And I know traders that are making a ton of money, and I know people are losing a ton of money. So for my personal strategy, for what I do, I'm a long-term, and I want to be long-term in this game. I want to be, I've managed, pretty decent green streak. And I just don't want to get involved in something that I'm not comfortable with. So if that's part of your risk management plan and you feel comfortable trading that, that's great. Some of the levels I've identified is the $200 level that we've sort of bounced off several times during the week. That's a level that I'd look for a dip play. But ultimately, we know what the stock is worth, and we know that it's been completely squeezed up. And we risk potentially an offering that the company could do to raise some money, which again, a lot of us are probably fans of GameStop, so no worries there. But, again, guys, look at all these red candles and look how long these wicks are, So I really feel like this type of play is really a day trade play. But again, if you bought back here in the 20s and 30s, anything you have essentially is a green play at this point. And so again, you can continue to trade it, you can cash out and move on to something else. But my personal, preference is that, yeah, we know where the stock's going to end up at some point. Okay, it's not going to hold these levels forever. So just be careful and manage your risk and manage your size when you're doing this type of a stock. And the last stock I like to go through for our Sunday night update is going to be AMC. Again, it's being manipulated just like GameStop. And so some of the key level resistant levels I mentioned was 21. And I know we hit 26, I believe, right up here coming up on Wednesday. But, again, these squeezes and these massive dumps are just real volatile. So it's really hard to understand, when you get a breakout, where is it going to run into resistance? So the level that I'm looking at would be 26. And the first level, key level here is 22, 21, 22, $2. What I expect tomorrow is potentially a flush, but definitely I can see us still trading in this channel, and we'll see what happens. We'll see. We had massive volume on Wednesday, and then similar to GameStop, we had that massive dump where all the platforms were screwing over their users. And so now that we've sort of resolved that and they've let you sort of buy some shares, we know that people can buy these back and they can essentially raise them back up. So I can see this thing, racing up, but the first resistance level will be 21. And if you're breaking it out, we'll see if it can get past 26. The levels that I'm looking for that it held decently well was, the $12 or $11, 50 cent level. That level's been pretty good. And then the ultimate dip buy that I'd go heavy, or I consider going heavy, would be $8. My personal strategy in terms of what I've been trading is just selling puts out of the money. I was on this day, I was a little nervous. The play, you know, it had triggered. I believe I was selling puts around 10, and we traded all the way to 6. But honestly, it's like, even if you got caught short or buying puts on these calls, and let's say you ended up having to hold, because all the puts I do expire on Fridays, is that I wouldn't mind holding. And the reason why I wouldn't mind holding is because the calls for that same strike price are going for $300, right? So if you buy something, for example, at $10 and you bag hold, you can sell a covered call for the following week for $300. So your true cost is almost like $7 a share. If it's essentially $10 and you do a put contract that's 100 shares and you're getting paid $300 a premium, right, to sell the covered call for next week, so your essential cost is $7. So not too nervous about it. I love the volatility, and I'll probably be selling puts, same thing this week. But if I were to actually buy physical shares, I would be looking at the $8 level to definitely go heavy. And like I said, I can definitely see this thing testing the resistance this week and probably even blowing the top as we squeeze out more shorts. All right, guys. Well, try to keep this quick, and hopefully that's helpful. You know, if there's any sort of help that you need on any symbols that you're trading, feel free to post them below. I do read and respond to all my comments. And with that said, guys, I will post daily recaps this week as well. And I do actually have an exciting video I will be posting shortly. I did an interview with a food truck owner that is blown up his business, and any of you guys looking for sort of a side hustle, or you're interested in doing your own food truck business, definitely check out the interview. It's how to start your own food truck business. I'm going to be posting that on the channel, so definitely take a look at that. And guys, as always, best of luck trading, and I wish you guys well, and I'll talk to you later. Bye bye.